Hello everyone, today I will go through some of Michael Burry's most notable purchases he made in Q4 of 2020, as well as what he sold, and I will give my thoughts behind why he may have purchased these stocks, given what Burry has said about the major threat of inflation he sees in the economy right now, so stay tuned. Hi everybody, welcome back to The Contrarian. For those of you who are new here, my name's Logan. I really like to talk about overall success investing, as well as going against crowd thinking mentality. So if you get to the end of this video and you feel like I've earned a subscription, just consider subscribing to this channel. And I'll also make a disclaimer that I'm not a financial advisor, so just don't take any of this as financial advice. Now to start off, we are somewhat of a disadvantage right now, in that Burry does trade in and out of his positions more than most other institutional investors I've seen. He's very quick with trading in and out, especially right now. Especially in the last year, it's a lot of temporary getting in and getting out quick, as can be seen on these last 13F filings he has submitted. So in other words, we really don't know if he is for sure still holding any of these stocks or positions that he was in Q4 of 2020. And we also don't know yet what some of his newer purchases could have been so far in 2021. And that's just the way it works. Unless you're one of his clients or one of his very close friends, you probably don't have any newer data than I have access to on Whale Wisdom, which is a good site for viewing, as it sounds, the action taken by a lot of the famous investors out there. So let's start off by looking at what Burry has stated is the most up-and-coming threat out there. And simply put, it's inflation. And he sees it, as a serious threat due to all of the money printing and basically quantitative easing explosion that has happened since last year, as well as just all the investor euphoria going on in the markets right now. He sent out several tweets, and I have been asked about this, and yes, this is Michael Burry's Twitter account. I know it seems a bit strange, but he's also a fairly strange guy, so I guess I don't entirely know why he's tweeted some of the things he has in the past, but yes, this is Michael Burry's Twitter account. So yeah, let's look into this. Speculative stock bubbles ultimately see the gamblers take on too much debt. Margin debt popularity accelerates at the peaks. At this point, the market is dancing on a knife's edge. Passive investing's IQ drain and stonks group hype add to the danger. Or stonks go up hype, I think is what he was saying. But essentially what he's just referencing here is this chart that shows the typical, margin debt versus S&P 500. And what can be seen here is that margin debt is, in the red, and that's actually an inverted graph. So when you first look at this, you kind of are a bit confused, but that's actually showing that every time before, or basically at the time the market has peaked, is when margin debt has been the highest. And right now you can obviously see margin debt is way off the charts in terms of where it has historically been. Right now we're well past the previous highs that we've ever been at in terms of margin debt. And I think what Burry's getting at is that, very similar to these past times, the market has probably been driven up in part by margin debt. That's probably what he's referring to, and as well as the passive investing, just the amount of intelligence that it takes out of the markets, the very mathematical approach that gives to just buying stocks simply because you're buying the S&P 500 or because you're buying the Dow or whatever it is. He's also referring to his past claims about the whole passive investing bubble. But another chart that he posted that's very relevant is, this chart of what has performed well in past times as inflation has risen. He also references hyperinflation, places like Venezuela, Argentina, Zimbabwe. And I don't know that the United States will see hyperinflation, but apparently Burry thinks that isn't out of the question. So I guess that remains to be seen whether or not we see hyperinflation and just a complete obliteration of the dollar. But essentially what Burry's saying is that real assets, commodities, real estate, gold have done very well in times of inflation, and things like small cap stocks, financial assets, and long-term treasury bonds have done very poorly. So in these tweets, it's clear that Burry believes that there is a lot of investor euphoria and what would normally be called dumb money going around and creating all of these bubbles we can see in the market right now. I think When I mention the word bubble, it kind of, brings to mind all of these micro bubbles, whether it be in GameStop or AMC Theaters or Nokia or Tesla. That's a much larger bubble, as Burry has often pointed out. There's just so much euphoria and greed going around right now, and not very much caution. And this is what I would characterize Burry's updated portfolio as, is very cautious. Going with conventional and generally larger and more established picks, at least for his largest positions. So now let's look into his Q4 13F filing. And right off the bat, the top three positions are call options. And this is very notable. In the past, it's nothing new either. Q2, I believe, he had Google, a very large call on Google that was something like 34% of his portfolio. So Burry he likes to leverage up on call options especially, and we can definitely see this right now with a call on Citigroup, a call on Pfizer, and a call on Kraft Heinz. And yeah, I would say that the most unique one of these that I see right now is Kraft Heinz. Obviously, that's been a very beaten down stock in the last several years, and definitely in the last 5+ years. And apparently, Burry thinks that at least from where he purchased it, that could go up significantly. Pfizer is probably a play on the vaccine rollout going on, and that strikes me as a very, straightforward thing to do right there. And Citigroup, I'm not entirely sure what he's buying into there, but apparently he believes that the finance sector can rally as well. And essentially, when you're purchasing call options, you're betting that the underlying asset will go up significantly, at least, more significantly, to where it makes more sense to buy a call option rather than just buying the shares. So obviously these probably are not long-term positions, but yeah, that's just interesting to see that he is willing to leverage up that much on options. I don't think I've ever seen another institutional investor leverage as much as Burry does. But yeah, he did a lot of other buying as well into other areas, such as Wells Fargo. I also think that's a notable purchase. That's also a very beaten down finance company. They had that whole scandal about all these fraudulent accounts or whatever that was a couple of years ago. So yeah, they have just a fairly bad reputation around them right now, but apparently Burry thinks that company could rally as well. He sold some of the positions that he had been holding for a while, or he trimmed them down significantly. Discovery, he trimmed that down 50%. Yeah, Western Digital Corporation, he trimmed that 40%. So, it's just kind of hard to tell with what he's thinking. Obviously, a lot of the stocks that he has trimmed have gone up significantly, so that could also just be an adjustment of his portfolio due to that, again, with designer brand index and everything. Yeah, and he also added a lot of things. Now Inc., energy. Yeah, adding Lumen Technologies. Yeah, so I think that's pretty straightforward. It's hard to, again, tell how long he's going to be in any of these positions, but yeah, now let's look at what he has sold out of completely, and he did a lot of selling as well. Obviously, all of these call options, he probably had to exercise them or sell them, and I think they all did work out very well for him in terms of where he bought them at. Yeah, looking at Facebook as well, he sold that 100%. So, and that was not call options. So, that is notable, as well as Corvo Technologies, CVS Pharmacy, yeah, and GameStop, of course. He actually sold out of GameStop very early. He could have sold much higher. I think he's probably kicking himself a little bit, like I am right now. I sold out of that a bit too soon as well, and so that was a bit disappointing for me. He sold out of his Google call options as well, CVS call options. So in a way, it's hard to understand if many of these recent buys Burry has made are long-term positions for him, or if he is planning on simply holding them for several months, before selling, or if he is holding them until it looks like the market could crash. So it's really hard to say, but Yeah, I would characterize his recent actions as just selling out of a lot of these smaller companies, as well as positions that have done very well for him, and now he's kind of going more in with a lot of these shorter term call options on these large established finance and healthcare and consumer staples companies. Um, yeah, but hey, with a guy like Burry who's willing to have positions go, down 50% or more and stay there for a year or more, you really never know what he's thinking. And here's just a chart of Scion's performance versus the S&P 500. Scion's is in the green, and I just laughed really hard when I saw this because basically up until just a few months ago, Burry was underperforming the S&P 500 for the last couple of years. And then in the recent, since GameStop and everything started taking off, he's up, four times, five times the S&P 500 in the last year, up around 250% or something. So that just, in a way, summarizes Burry's investing style. He's willing to have positions and things be underwater for a while, and he's willing to take the long-term view and just wait things out. And, apparently that has worked out for him well in the past in terms of both the big short that he did with the whole housing market and betting against the CDOs and everything. That was very similar to this. It was underwater for a very long time. And by a very long time, I mean, 2 or 3 years, but that's a long time if you're paying premium to hold that position. And yeah, so apparently that investing style does work out well for him. I personally wouldn't, I'm not that patient when it comes to waiting things out, but Burry and apparently his clients are willing to accept that. So, yeah, I would just characterize his recent purchases as very cautious and going with very established and generally more large companies than he has in the past. And also, it's very hard to say, if these are short term or long term. But, he still is in the market, and I think that is a notable thing to note as well. So if you guys like this kind of content, I like to talk about investors such as Burry and others. Yeah, and I hope that you enjoyed this video. I try to keep them on the shorter end just because I know that you like to use time for other things as well. And so I will sign off now, but I hope that I get to talk with you again.